Hey guys, Tank Sauce here, back again for another video with you guys, and I just wanted to go ahead and talk about zones and levels in this one, right? So this one we're going to be talking about zones, which are areas in price, and generally we'll denote a zone with a box, and price that we expect to see a reaction within that zone, right? And if we're talking about a level is going to be a specific price, right? That we're expecting to see a reaction at when price hits that level that we have. So you guys are going to hear us saying, I have levels at this number, this number, this number, and this number, or I have a zone right here, and the zone ranges from this number to this number. So that's what they are. They're specific areas or a specific point in price where we are expecting to see a reaction when price gets there. So, what are some zones that we use, right? I'll go to the 15-minute time frame for ease of easiness. So, one of the zones we use, I use, other people use, is called an FVG or a fair value gap, right? And we call it a FVG. You won't really ever hear us say fair value gap. You'll hear the abbreviation. So what is an FVG? So an FVG is a three candle pattern, and it's here's the candle one, candle two, candle three. Uh, those three candles between candle one and candle three, the wicks leave a gap, right? They don't overlap each other when they cross candle two, and that will be what is called an FVG. And that is a specific zone that we use and we expect to see reaction in price. So what's another FVG? Well, and they don't all, all of these where there's gaps between are FVGs, fair value gaps, but they form in different areas. Here's one right here, right? Candle one, candle two, candle three. The wick of candle three does not overlap the wick on candle one. Crossing candle two leaves a FVG. We have another one here. Here's a fair value gap. And you can see when price comes back into the fair value gap, it continues down in the direction that it's going. So that's generally what we expect to see when we are talking about our zones or we mark out zones on our chart, right? Those are what we want to see. So the other type of zone is an order block, or it's also referred to as supply and demand level. So this is going to be a supply zone right here. And generally we denote those in the color red. And when price comes back up to the supply level, we generally want to watch for shorts from there. Or when price comes back up and hits the order block, we generally want to see price come down from there. Now, there is an opposite side to that, where when we're bullish, it'll be a demand zone or it'll be a bullish order block. And when price gets down and hits that, we'll generally want to see it continue upwards from there. And just here's one you guys can see. It's the lowest point, the last candle in the move down will be the zone. And you can see once it comes back, it hits it and it continues up. And this would be colored green, or you can color it gray, or you can color it however you want to. So that way you know what it is. But just right here, we go up, we came back down, we hit the order block or this general zone, and we continue up from here. So if we're saying, order blocks, FVGs, supply zone, demand zone, those are what we're talking. We're talking a specific range in price that we want to see the market react when it gets to it. And levels, there's different levels. There's supply levels, demand levels, and when we're talking about a level specifically, which a lot of us are going to be using specific levels, we're going to have areas in price. It's an exact number. So if you hear one of us in the group, one of the mentors, one of the traders talking about a level, it's a good idea to note that level and watch what happens when price gets there, because we're going to be expecting price to get to that, right? So that's what zones and levels are. And zones and levels also can just be highs and lows, right? A level can be a swing high A level can be a swing low, and those will be specific areas in price that we're expecting things to happen. You're going to hear Diamond Hands and myself and some of the other ones talk about our levels, and that's what we're talking about. You'll probably hear me talking about FVGs, and this is what I'm going to be talking about when I'm talking about an FVG. A lot of times I'll be looking and referring to them on the daily time frame, like one for example. I am expecting price to come back into this FVG right here. Maybe on Sunday or Monday, we'll take this and go up into here and come down. Previous day highs and lows are also levels that I like to trade off of, and a lot of us pay attention to. And that is going to be primarily to see price do one of two things. Like we're saying, it's either going to take it and then trade to the other side. It's going to take it, hold above, and continue, or that one should be up there. Or we'll take it, we'll retrace to a 50%, or what's also referred to as equilibrium, as you guys will see on the terminology chart, and then we'll continue in the direction that it's going. So those are the ways we trade our levels and our zones. And if we want to see price hit an FVG, which again is a zone, and reverse and continue in the way it's going, what happens if we close outside of an FVG, right? Well, here on Friday, we did not hit this FVG and continue down. We attempted to right here. However, this end of day candle took the FVG and closed outside. So that could be a good indication, right? That price is going to stay here and continue upwards from here, because this is what is referred to as an inversion, or like a turncoat FVG. So those are some of the different zones and levels. Again, I'm not going into super detail of how to trade these exactly, but just some ways for you to be able to read and understand what we're talking about when we're in the group or in your trading, right? Let's see what else we could go over. Yep, that's pretty much it. The different levels you'll see us using is the previous day high and low, previous month high and low, previous week high and low. We'll be using midnight open. We'll be using the opening print, um, and different zones. You're going to hear us talk about our supply and demand zones. You're going to hear us talking about fair value gaps, FVGs. You'll hear us talking about order blocks, and things of that nature when we're referring to zones. So you might not hear zones as frequently as you will levels, but you will be hearing them a little bit. See you guys in the next video.